Welcome to Bitcoin Escape Plan. You may have noticed that Bitcoin has been dropping rapidly after losing key levels last week. And in today's video, we're going to go over the key levels of support and resistance that either confirm or invalidate this further move downward. Later on, we will go over the historical context just so we understand the higher time frame analysis of how the price typically behaves during this time of year. And then at the very end of the video, I will go over the perpetual trade I'm in and just in general the best setups for some scalps while we are in this chop. If you're new to the channel, go ahead and check out bitcoinescapeplan.com, where I reduce market uncertainty around Bitcoin with the levels that matter most, just like here on YouTube every Sunday, Monday, Wednesday, and Friday. If you are new to Bitcoin in general, or you just really want to understand how I'm able to be so certain about all these calls that I make, you can check out my book right here. If you click on it, you just put it in your email and you can read it for free over on the website. And then it is Monday, so you can read the new newsletter right once I am finished recording this video. So on the 4-hour chart, the story I always like to start. It is worth noting that we did just break through this uptrend. This uptrend is from 59.9K all the way back here in February. That's actually easier to see on higher time frames, but that is notable. We did see that break initially last week, and it was unclear whether we were going to stay above it or break below it. And on Sunday, we broke pretty aggressively down below it. It's also a period of compression here on the 4-hour Bollinger Bands. It's pretty normal for when we see a period of compression for us to go from one side to the other. And it just as easily could have broken back above if we held strength at this time at that trend line. But as I'll say later in the video, the higher time frame analysis was showing us that we were going to go lower. So there wasn't really any reason for us to believe that we were magically going to show strength off that level. And it's more likely now that we will be heading back towards that direction as resistance, not as support. So initially speaking, what do we have to look forward to? So we lost the 4-hour SMA on Sunday at around 73.5K. It's currently sitting at about 73.3K. Everybody knows 73.8 is the important psychological level in that region, being the March 2024 all-time highs, the ETF all-time highs. And then at the moment, we're just basically ripping through these other Fibonacci pivots. 72.5, I wrote about in the newsletter, as well as this guy right here. Actually, I don't even know if that one had showed up. I think this is new. I think 69 had showed up and 72.5 had showed up, but 71.2-ish is actually new as I'm sitting here making this video. But I think that's primarily just because we saw enough of a drop that we're starting to see a little bit of strength off of that. Again, I'll go over this more at the very end of the video because that's actually a decent scalp trade setup forming on the 4-hour. We got about 2.5 hours left of this candle. So I would want to see a bit more of a drop, and we did flip on the 15-minute time frame, it looks like, as well. So I would expect in the short term of, if you're watching this video in the first hour or two, we're going to see a little bit of upside momentum. But for the most part, I think we're over the course of July, or June rather, we are going to continue chopping down lower. So in the short term, what are the other key indicators that we need to pay attention to? Well, this guy over here is the bottom band of the downtrend anchored VWAP. If you don't know what I'm talking about, go over here to courses where I explain that in more detail. But essentially, this is a magnet that the price gets pulled towards. And when we broke the other side of the magnet over here, it pulls us down towards this element. Now, actually, this is the elder VWAP. This is from the 2011 one. This is the downtrend one. So technically speaking, we never actually hit this part of the downtrend band. This is also the downtrend band. This is the uptrend band. So we're headed to the bottom band of the downtrend anchored VWAP. I don't think that there's going to be that much that stops us from hitting it. Again, 69K is important, being the second all-time high in 2021. So important psychologically speaking. Around 70.3K, as I'll go over later on in the video, is the middle of the range between 64K and 76.3K. So also pretty important, but not necessarily enough to form support. And at the moment, we saw the low go to about 70.6K, which again As long as we are above 70.3K, that puts more pressure towards a retest of 76.3. And once we start to break below 70.3, that's when we start to see more pressure build up for a 64K retest. It's a little bit early for that, but as I said, we've already seen the majority of the move happen. I watched my short trade almost double this morning. So I think we've already seen most of that initial move, and now we'll probably chill out a little bit, maybe start making some momentum back towards the upside. 72.5K was pretty important last week, so it wouldn't surprise me if we see a retest of that. That ultimately gets regarded as resistance, but that's kind of what I would be paying attention to, is a retest of 72.5. It's hard for me to believe that we're going to get to the 4-hour SMA while it's this high. I am inclined to think that we are going to fail if we get back to this uptrend, which just means downside pressure. Now it is worth noting that May we hit the highs very early. I believe it was like May 5th or May 6th that we hit the highs. So it kind of remains to be seen whether we'll see the lows for June right away, or whether we will consolidate for a period of time and then start to see the drop. We don't really know. It's at the moment, it's looking like it's all going to happen at once, but I think that's a little bit skewed by just, again, losing key levels. I think sometimes makes the price behave a bit irrationally. And then the other most important thing is this guy right here. This is the point of control on the anchored volume profile. At least since I set it, which I believe was like last December or something like that, is right here at about 76 or 67 rather 0.5K. Which just means that's the highest point of volume on the chart. So that's where the most people have had strong conviction to press the buy or sell button. And it's going to be important. I think there is likely where we could start to see some support form before, again, it is my bias that we're going to go lower than that. And I'll go over that in just a moment. But that's what I would be looking for on the 4-hour time frame, is initially, by the time you're watching this video, we probably would be confirming whether 71.2 is support or not. The 15-minute bands are also compressing right now, so it's just as likely that it continues to the downside. But typically speaking, when we're looking for a short scalp, that's what it looks like. Looks like one of those guys kissing candles. Anyways, we'll go over that more at the end of the video. So if we're looking at the higher time frame, what has happened? So most importantly, obviously, it's June 1st. Happy June. Hope you paid your rent. So we had our close for May at about 73.6K in inverse of 76.3K, interestingly enough, a palindrome, if you will, which puts us in an interesting position now, because historically speaking, what we would expect is that we get 3 to 4 green candles in a bear market year. We have already had 2. So what we watched all last month, and again, anyone who's subscribed already knows this, I went over it in every single video, we watched the price hit the local highs that I have been talking about since February of 83 to 86K. At that point, we started to break down until we had an inverted hammer like this guy that eventually became and was confirmed as a shooting star pattern, which is inherently bearish for us, especially after momentum to the upside. If this was right here, then that would actually be indication potentially of a reversal, but because it was after a period of upside momentum, we have more reason to believe that it's going to go lower as opposed to higher, which means that in order for June to be confirmed as a bearish month, all it has to do is close below 73.6K. And that's it. So it could stay exactly where it is for the rest of the month, and that would still technically confirm what it needs to in order to be bearish. And again, that is what we would expect to see. Typically speaking, we get 2 to 4 candles, like 3 to 4 candles that are green, and the rest of them are red. July does seem to be one of those candles, and that is my baseline assumption on the channel at the moment, is that July is going to be our one other green candle. Would you look at that? Same thing there. I don't think it's exactly here. This is actually into June, and then July is where we started to see a sell-off in 2014. But for the most part, again, we got 1, 2, 3, 4 candles total throughout that entire bear market and it's the same for the other ones, 3 to 4 candles. So what does that mean for the rest of the year if we're going to see things continue as they have? That means that every other candle besides 1 or 2 months is going to be red for the rest of the year. So you need to keep that in mind alongside whatever other analysis that you're watching. I'm laughing because I'm still thinking of all the channels who like a week ago were saying how Bitcoin is going to 100K, and like I watch their videos now and they're like, could Bitcoin continue dropping? It's like, dude, you have no idea what you're talking about. You don't know how to analyze a chart. I'm over here using a free TradingView account and using 2 indicators and volume to be able to accurately predict it. Like, it's not rocket science. You just have to listen to what the chart is telling you. And what the chart is telling you is we got a lot more downside momentum to go through. So me personally, based on the shape of the chart in a bear market year, what I would expect we are going to see is a breakdown towards 64K, potentially as low as 60K. However, I think it's a more interesting narrative right now for where we are in the summer if we don't hit 60K again. Now, that doesn't mean it's impossible for us to hit 60K again, but I think it's a more interesting narrative if we do hit 64, but do not hit 60. It gives a little bit more hopium for July to be a potential rise, and that is my expectation. My expectation is that we see this breakdown for the rest of June, and then really, again, as long as it closes above about 68.2, I believe, is the open for April. If it like really, we would want to see the price close somewhere around there if we're going to get some hope for a rise in July. But I would expect the wick is going to go at least to 64, and again, potentially lower. And then it doesn't mean that July has to be mega bullish. You know, the July, like, this is a bullish candle. That's barely bullish. You know, it's very likely that July could be similar. Other than, I don't think the wick is going to be that gnarly. Like, I think it's more likely, say we have a June close, the wick probably will hit 64, but say we have a June close somewhere up here, then that means the most I would believe a wick is going to be, I guess it's the same thing as 76.3K. And then we would see a failure after that point. So most importantly to note is the weekly SMA. We have broken back below the weekly SMA. So, you know, obviously it's Monday. We got a long time until the Sunday close. However, this is the second longest period of time that we've spent above the weekly SMA in the history of Bitcoin. The only other example, as everyone on this channel already knows, because I talk about it in every single video, is 2014. Hold for scrolling. So 2014, this is the only other instance that we have on the chart where we have 12 weeks elevated above the weekly SMA, and you may notice it still reacted to the downside after that period of consolidation. So that is what we're expecting to happen. You know, that's what I've been talking about as I expected, is that we're going to break to the downside, just as we have in every other instance. This is also the July higher lows that we see in a lot of instances. If we're just looking at it specifically from in terms of timing, it does look like the June low is in pretty early by about the middle of the month, and then we start to see a reversal. This is the last time Donald Trump was president as well, so worth noting. I think it's a little bit similar in 2022. I don't think it's identical. Oh, that's 2021. Sorry, looking at the wrong part of the chart. 2022 was more pronounced. It was also, we had a lot of businesses going bankrupt during 2022, combined with all of the NFT hype. So I don't think that we're going to see another 2022 style drop. I think it's much more likely that we see 2018. Which means that we're probably going to hold, again, I would think of this right here, think of that as 60K, as 64K. This is 64K, this is 60K. And interestingly enough, what is this on the chart? This is 6K, and this is like 6,800, 6,400. So very, very similar. We're literally just adding a zero to it, essentially, but same exact range. You know, you could write it on a cocktail napkin. That's the point. Sometimes Bitcoin is very simple, especially when it's boring. So what we would anticipate if we're going to see more of this market is essentially we've got another, let's see how far of a drop this is. Another drop of almost 50% to the bottom from that point, which would put us at a low of around 30K. I don't think that the price is going to drop to 30K personally, certainly not in the month of June. I really think that the month of June, the lowest that we're going to see is either 64K or another 60K retest. Not impossible for us to break a little bit lower. I don't think so. I think it's going to be more similar again to 2018, which means we're going to stay in this range until we confirm in July that 76.3K is a failure. If, again, we even get that high, it's possible that we don't even get that high, and that it is a lower pivot point that is regarded as that support and resistance level, which could be 64K. If we rip right through 64K and it takes us the rest of the month to start building past us, we might just kind of get to 69 and then fail and then properly close below 64 in the month of July. But that's still personally what I'm anticipating is a lower high is going to form in the month of July. That's probably going to be our only other green month other than maybe October and November. And most people are anticipating October to be the bottom. So not unreasonable for November to then be a green month, because not that hard to be bullish off of the lowest price that Bitcoin will have for the whole cycle. You know, it's going to be a pretty easy underhand pitch for Bitcoin the following month of whenever the actual bottom is. So you just need to keep that in mind for whatever your strategy is. You know, whether you're purely focused on just DCAing and you're not really trying to trade the swings of it. I know a lot of people that I get comments from on Threads have just been more focused on stocks than Bitcoin in general, which I understand. Everything is ripping. You know, SPY is at new all-time highs. It makes sense to be paying attention over there. I'm not going to. I am convinced personally that the powers that be will do everything in their power to make everything else seem appealing so that you are not focused on accumulating more Bitcoin. You know, because the governments are accumulating more Bitcoin. Corporations are accumulating more Bitcoin. Why the hell are you, as a human being, not accumulating more Bitcoin? Doesn't make any sense. So your only real argument or like thing that you need to process for yourself, in my opinion, is when are you going to allocate the capital that you have towards Bitcoin, or what are you going to do in the time period between now and then when it makes most sense? Because again, if we're just thinking about it historically speaking, anytime we're below the weekly or SMA is the best time to buy Bitcoin, period. If we look at it from a purely historical analysis, this was the best time to buy it. Now, the actual best time is right here at the bottom, but you can't always time the absolute bottom. I do have a strategy for how you can get extra cash at the absolute bottom. Again, if you go to courses, I have that in there, as well as if you go to courses on the website, it'll take you to the second ebook that I wrote, is how you can leverage your credit to basically just like massively increase the amount of cash that you have at key moments using balance transfers. That's my plan. That's what I'm mostly focused on for the end of the year. And in this particular instance, so I wouldn't really care personally if I don't catch the absolute bottom. The point is that you're going to get leveraged exposure just in the form of, you know, you're taking on debt at 0% APR that you will eventually have to pay back, but leveraged insofar as you have a larger spot accumulation advantage than you would if you were just using a normal cash. Again, you can watch that in the courses video. I break down the whole strategy in full, and there is a book available that I wrote if you want to know more about it. So me personally, that's what I'm focused on, is I'm not DCAing yet. I will probably start a small DCA after that top has formed in July. Once that top is formed in July, and really once we get back to 64K, because to be clear, if we go to 64K or 60K here in June, that's not a terrible time to buy a little bit of Bitcoin. Do I think it's still going to cut in half after that? Yeah, I do. I think there's a very high likelihood, at the very least, that we're going to go to 44K. That Fibonacci pivot has been there for a while now, at the very least since January, that has been formed. Before that, it was lower at this 37. Me personally, and I say this on the channel all the time, me personally, the lowest I can believe Bitcoin is going to go this cycle is somewhere between 34 and 39K. I just think that there's like a decent amount of support at 32 to 35K. Super, super important as being the mid-range point of the 64K and 69K all-time highs. So very, very important there. And to me, it's hard for me to believe the bottom is going to go below those levels. Not impossible, but I've seen people calling for 20K Bitcoin or 10K Bitcoin, and I don't think those people know what they're talking about. Like, it doesn't make any sense based on the chart. 44K makes sense, potentially lower makes sense. Me personally, I will probably be exposed to the downside at least until 44, and then I might chill, take a bit of a break, reassess my liquidity, and then at that point, I will probably be looking to add spot exposure to Bitcoin as opposed to catching the rest of the downside move. By that time, I would imagine I'll have focused more on scalps as opposed to swing trades. And then I just want to make sure that I can have maximum exposure both on spot and leverage moving forward towards the end of the cycle. So I know I kind of already started rambling about the trades, but let's go into it real quick. So again, just as a recap, I took a terrible entry. This is not a short entry. This is a long entry. I took a short there because I knew that 76.3K was very important, like I talked about earlier in this video and every other video that I make on this channel. 76.3K is super important across the time frames. So I knew as we were showing weakness in that region, I wanted to be exposed to the downside, and I'm quite happy with that. I think I'm up like 50% on my trade at this point, or something like that. Not quite 50, but pretty close to 50. And again, I would anticipate it's going to continue to the downside until we start to show strength again on one of those key levels, which I think is going to be the bottom band of the anchor VWAP. But this is not a concrete wall. You know, this is a wall made of mesh that is able to move, you know. So I don't necessarily think that we're magically going to stop there and then continue breaking out lower, or that we're magically going to start bouncing higher from there. It's more that the price is going to be pulled to that, and I'm just going to pay attention to how it wants to behave. So for this short, I'm really most focused on, do I want to close it at 60 or 64 in June and then try and capture the upside momentum into July? Or do I want to just allow that short to compound and then take futures contracts to the upside on the rise in July, which I think is probably more likely what I'll do. And then at the end of July, once that movement has been clear that it's going to be invalidated and it's going to head lower, at that point I would further compound on the short trade. Which I think, as I'm saying it out loud, that is probably what I will do, is I will just let the perpetual trade run to the downside with no real need to close it. And then I would just double down on it like towards that time point, like I said, in July, where we've seen the bottoming effect and we have started our way back up. I don't think it's going to randomly, like, I don't think we're going to start getting green candle after green candle in July. Like, it just doesn't seem likely to me, especially with the Clarity Act taking a really long time for them to figure out exactly what they want to do with it. As well as, like, I don't personally believe that the Clarity Act is like inherently bullish for the price in the short term. In the long term, certainly, you know, it creates the inflows for trillions of dollars into stablecoins, which is definitely net positive for Bitcoin. But I just don't think it's going to be like net bullish right away. You know, like December 18th, they posted the Chicago Mercantile Exchange. You were allowed to trade Bitcoin futures. When was the top in December of 2017? December 17th. So the day before they released futures contracts, the price topped and then they shorted the hell out of it. So I feel like it's going to be very similar in July whenever they pass the Clarity Act. Is like, they're going to pass it. We're going to know exactly what the banks are going to do over the next 6 to 12 months. And then they're going to short the living hell out of the price now that they have certainty. I don't think that is going to result in Bitcoin just like magically teleporting to the upside. I think that's what people who are uneducated might think that it means, but I don't think that is the case. I think it's more likely that we're going to continue to see downside, again, towards those targets that I mentioned. I just don't think we see those targets until we actually have this full round of, you know, drawdown towards 64K that gets resolved one more time to the upside in July, and then I would assume after that point is when we really start to see failure. And again, by then the Clarity Act will be passed or vetoed, which will be mega bearish for the price. That would not be good for the price. I don't think that's going to happen. I think that they are going to pass it, but God forbid, for whatever reason, they're not able to pass it. Like, that's what would happen, is the price would react very negatively to that event. So that's what I'm like. There's not really that much to talk about the trades, to be honest. Like, I guess if you're looking for another entry, as I said earlier in the video, technically speaking, this is a long entry. We are well outside of the Bollinger Bands at the moment after a significant period of time breaking down below it. Similar to these guys, like how we were breaking down for a while. And then this is kind of the first indication that we have a long entry, even though this one's a little bit cleaner. But even then, you're talking about a 1.5 swing to the upside, not even a full 2% move to the upside that you'd be trying to capture before, again, a period of consolidation and then a falling knife. So me personally, I'm just more focused on exposure to the downside, and I would be looking for more levels to compound that trade as opposed to trying to catch quick scalps to the upside. Although this one already, let's see, this one's already a little bit above a 1% one had you caught it towards the beginning of this candle. It's hard for me to believe we're going to get much higher than 72.5K initially. I do think that the climb back to the monthly candle is going to take a while. We just lost that. So I don't think that we're going to break below such a key thing with this uptrend and then magically recover it right away. It's possible that we just slow down for the rest of this week. But the longer that we spend below the weekly SMA and that trend line and are getting pulled towards the bottom band of this anchored VWAP, it's just all signs point to bearish, even if there are short little hiccups where the price seems like it's behaving well. As I barely ever talk about the daily time frame, but daily time frame is just getting hit with a hammer right now. It does not look like it has any chance of reclaiming. And again, where is the SMA at the moment? It's right at 76.3K, which, as I've just stated, it's hard for me to believe we're gonna get back there until July at the earliest. I think we're gonna continue to see downside into June. So I guess all you can really look at is points to compound the short. They're not gonna be like, I don't like daily candle entries, to be honest. I like my 4-hour candle entries. They're a lot cleaner. They're a lot more clear about what's a long and what's a short. Obviously, if you had shorted any of these, you'd be right. But like, is the chart telling you that? Not really. Like, that's a long. That you're not getting any like clear indications that you should be shorting this range, other than just in general understanding the context of where we are in the market cycle, and that is downside pressure. So in terms of where you could add to a short position, like I said, 72.5K if we have a reaction to that level. I guess the trend line itself, which currently would be somewhere around 73.1, 73.2, depending on when we interact with it. But that's going to be very similar to this guy over here, where this was our third failure of 82.5K, and technically would have been our like most clear non-Bollinger break short entry. However, again, we're in the middle of the Bollinger Band, so there's not really any way to predict that, and you're going more based off of naked price action, which does work. A lot of times, like I said, that's how I entered this trade and knew it was a short, was off of the naked price action, knowing that 76.3K was prominent. However, I just feel like the levels are less important here. 69K is important, but would I short that level? No, not really. Like this is the value of like already being exposed ahead of the trend. Like, I don't really have a problem that I was in loss for a day or two or whatever, or even a couple of days, I guess, before the trend really went in my favor. It's more about having exposure to whatever the given trend is, which again, across every time frame that you can look at is bearish, other than we have a short amount of upside momentum on the lower time frames. But I don't think it's going to magically push us back to key levels, just because, again, we just had a monthly close, we just had a weekly close, and both of them were supremely bearish. So that's what I would expect, is further downside momentum. Go check out the newsletter. It'll be up shortly after I have released this video. If you're still watching at this point, thank you so much. You guys are the best. I really appreciate it. If you want to work with me one-on-one, you can send me a message on Threads, Instagram, or email me directly from the newsletter. I'm basically going to repeat the same things to you as I do in these videos. But if you're someone who's like really needing some support on your strategy or your accumulation model, happy to jump on a phone call with you guys. So I'll talk to you on Wednesday. Have a wonderful week, everybody.